Let me now bring on board Vineet Bhatnagar, Managing Director with MF Global. Vineet, the world is looking like a broken down place. Everyone is running for cover, but unfortunately there is no space to hide.
Yeah, I guess that is indeed the reality that we are all living in. Every day the market seems to be dictated more by the headlines rather than perhaps the underlyings, and that is something that we think will continue as long as the uncertainty around some of the large economic zones continue.
So in such an uncertain or a choppy environment, when we are dealing with what could be called as unknown risk, what are you advising your clients? Are you advising your clients that sell and sell hard, or the days to sell hard are over?
No, I think one of the things that the clients are doing is to get a bit prudent about the size of their trading portfolio. Many of them, institutions included, have pruned down the size of the book that they are carrying. And of course, in addition to the fact that there are volatilities around the marketplace, around the currencies, there is also some policy-related uncertainty that the foreign institutions were facing, specifically with respect to India. So, early on in the month and previous month, they have pruned down the overall size of the portfolio or the book that they have been running.
Vineet, it's going to be an extremely crucial month because we'll have the Greece election outcome as well and would know whether or not Greece continues to be attached to EU. But what's the general sense that you're getting? After losing about 4.6% in the month of May, is it going to be an equally bad or equally disastrous next series as well?
In terms of the percentage, it may perhaps not turn out to be as disastrous as May was in terms of the contraction that we saw. We saw a high of 52.80. We also saw a low of close to 47.80. So that was a big, range that we have witnessed in the month of May. Going into June, clearly we are getting into June after having tested that there is a resistance that's 5020 that has not taken off in the last few trading sessions this week itself. Therefore, there will be an attempt for the market, technically speaking, to go back and test the previous support that it found at 47.80. And if the environment continues to be unhelpful, as we are discussing this morning, there will be a likelihood that 47.80 will be taken off on the downside. And in anticipation of such kind of a movement, one would have seen that the Nifty put distribution has actually moved down in the last few trading sessions, actually only between Monday and yesterday, from 4700 to 4500, which till Friday last week was actually centered on 4700 as a put protection.
Vineet, I want you to stick your neck out on this one. And my question is that in the month of May, the Nifty was down by about 6% approximately. Do you think in the month of June, Nifty will retest December lows?
I think yes. I think it is possible if things do not take shape in terms of what is expected of Spain and Greece. It is possible that technically it has to find a new way to go back to that particular bottom. It is possible, and this is something that I'm saying after having actually looked at the market in a different light just a week ago.
The banks have given up almost 6% in the May series as well. In fact, the Bank Nifty has pretty much moved in tandem with the index. Do you think that is going to be the sector again which is going to have the steepest fall?
I think so. I think the bank index seems to be really the determinant in terms of how the markets are, ebbing and rising. We have seen it actually from the very early weeks of January this year, and the volatility that is embedded in the Bank Nifty and all the frontline banking stocks is quite visible in the benchmark itself, and therefore it is quite reasonable to expect that the volatility that is going to pan out in Nifty will also be mirrored in the Bank Nifty and the underlying bank names.
Vineet, do you think what could differentiate Indian markets, at least in the month of June, is a vertical drop in commodity prices? As of now, money managers are not paying too much of attention to that because rupee also has fallen, so that effect is getting nullified. But if the global fear subsides, maybe Indian markets could start outperforming because commodities have cracked, and if commodities they crack further, that will put a lot of things under control for us.
Yeah, I mean, in the sense that if the currency, if the runaway pressure on rupee versus the dollar does reduce or get supported in terms of where the bottom would be, and also combined with the fact that the input prices through these commodity price contractions that you are referring to does start getting factored in the models for the analyst, 2 quarters away or 6 quarters away, which could perhaps bring in the underlying buying support in the portfolio managers' cash purchases for the market, then what you are estimating is quite likely. However, one needs to understand that there is so much sentiment-driven market behavior that one is seeing that a lot of it perhaps is reasonable, a lot of it is also perhaps unreasonable, but that is the nature of the beast in terms of a headline actually making all the difference.
Vineet, what about autos? Can we see significant pressure in the days to come for names like Tata Motors, which of course has poor earnings as well backing the move, and Maruti too?
Maruti and Tata Motors, I mean, for 2 different reasons, but Maruti has of course been showing weakness for some time. Tata Motors, on the other hand, was actually one of the strongest performers as far as the Nifty basket is concerned in the last 3-4 months, and notwithstanding the point about the profitability related reaction to the Tata Motor price, if there is a lack of clarity or visibility about the underlying domestic market related consumption that comes in over the next few months, there will be pressure on a sector like autos. Combined with it the fact that if the interest rate environment is going to be unhelpful, that is going to be another damage to the sales pickup, the monthly sales pickup. And finally, of course, any behavioral change that may come about as a permanent shift in the consumer's mind on account of the market determined petrol pricing as the reality for future.
So Vineet, what is the real price for Tata Motors? I'm sure it is not 340, which was the recent high, and I'm sure it is not 235, which is the current price. If I look at how Tata Motors has collapsed, it's down 50 rupees in 2 days.
Yes, which of course, as you rightly pointed out, was determined or was subsequent to the announcement relating to the earnings. Our sense is that the price or the target price for Tata Motors should be in the region of about 255 to 270.
Vineet, you talked about as to how banks are going to be weak. Which is the weakest pocket according to you? If you could give us some names, which would be, out and out short ideas. And would names like SBI be spared, or the entire banking pack is going to be, headed in for a weak patch?
One thing is about across the board, and that is symptomatic of an ebbing tide, or the impact that the low tide has on all boats. So that's kind of a philosophical way of putting things, and therefore to say that there will be names that will stand out and will be able to withstand the headwinds facing the sector as a whole, I don't think that is what is going to transpire, and therefore all banks will suffer. Relatively speaking, the private sector, frontline private sector banks are always the ones that face the brunt, and therefore the names like Axis, ICICI Bank, even HDFC Bank are always the ones that that always suffer the most.
Is that trade now getting too crowded, that when markets are weak, sell PSU banks, when markets are strong, buy private banks? Because if I look at State Bank of India, from middle of May, it is State Bank of India which really has done the trick, A, for banking stocks and then for Indian markets.
Yes, I agree with you. And I think that is also determined by the fact that a lot of the trading portfolios, whether it is the single stock future to cash related ARBs or other activity that we have seen in the trading portfolios of professional traders, are very much centered on the frontline private sector banks as against even a name like an SBI, which is of course a heavyweight though.
Vineet, the street is now worried about the way monsoon will progress this year. There are some very early indications from the Met Department that this time around the El Nino effect could disturb the monsoon current. As of now, do you think markets are working with the possibility that we will have a normal monsoon, and if things change there, that will spook markets further?
I don't think that my own sense is that there is not too much focus that may have got pulled towards the Met predictions as of now, because there is so much that is happening that people are grappling with otherwise anyway. If it were to be the case where there is a more conclusive assessment of the bad monsoon, it will be another headline that will only make the sentiment poorer than what it could be today. But as of now, I don't think they are factoring in a positive monsoon and therefore bringing in a support to the market.
As of now, markets are working with the possibility that we will have a normal monsoon, and if monsoon picture is not strong, that will spook the market. Yes. Okay. So what are you telling your clients to do in the month of June? Give us some trading ideas. Give us some investment ideas. Where do you think money will be made?
I think one of the only things that we are able to do, because we are not able to identify anything which looks like even an oasis in this kind of a desert. Even today, on account of the VWAP related pressure, we are assessing that there could be renewed downward pressure on names like NTPC, Tata Motors, HDFC Bank, BPCL. We are not seeing any pluses anywhere. The trading strategy that we are able to prescribe to our clients today is essentially centered around Nifty options, and that is where the strategy of perhaps buying one call of 5,000 Nifty put or Nifty call option and selling a Nifty put of 4,700 or 4,600 is the best that we can do at this point in time.
Vineet, so the strength that we've been seeing in IT, according to you, that's not going to last too long?
I guess it's an interplay of two things. I mean, there is always that traditional and quick-witted response to a weakening currency and the favorable impact it has on export earnings or exporters kind of business model. But combined with it is also the fact of destruction in demand from your large markets or geographies like US and Europe. And if that itself is under question, then where is the case of a downward rupee actually helping the Indian IT?